Today we're going to take a look at Chapter 6 in our payroll accounting, which is mostly just working with journal entries for payroll. Purpose of this chapter is to explain the procedures for recording the payroll in payroll register, transferring information from the payroll register to the employee's earnings records, recording these transactions in the company's book of original entries, and posting them to the proper ledger accounts. Some places that you will want to look for data in this, the payroll register, employee earnings records, the general journal, and the general ledger. First up, we're going to look at the payroll register, and this is taken from another year payroll project, so similar to something that you're going to see in our class. This is an example of a payroll register. Details that we have here: employee names, we have their regular earnings, their overtime earnings, and their deductions and net paid. Typically, it's going to have a time record, regular earnings, overtime earnings, total earnings. It also has information on the taxes and the deductions withheld and taxable earnings. Next up, this is an example of an employee earnings record. This is a supplementary record prepared for each employee. It provides information that's used to prepare the payroll register, prepare reports required, and determine accumulated wages, and prepare W-2s. Important factor with this tends to be what their accumulated wages would look like in their yearly totals. This is typically helpful in determining things with wage bases or maximum amounts. Next up is the general journal. This is an example of what a general journal would look like. Involves things like gross payroll and withholdings, payroll taxes and work comp insurance expenses, deposit and payment of payroll taxes, and end of period adjustments. Big reminder, in this class we use a lot of liabilities. As a reminder, a liability increases with a credit and decreases with a debit. So you're going to see a lot of transactions involving liabilities in this particular class. We're going to talk about some of the particulars in terms of our journal entries. Employers must record journal entries, scooting that up a little bit more, every time they issue any paycheck, even if they're cutting a check for one day's wages. We would record a wage expense of employer and the liabilities for FICA taxes and federal income tax withheld. Down here below, we're going to look at this example. We would have a wages expense that's debited. Any withholding accounts would be credited, and then the remaining net amount paid, which is cash or salaries payable, would be a credit. If we were recording the employer's payroll tax expense, we would be debiting a payroll tax expense and crediting any withholding account liabilities that we have. We're going to look at some examples. Starting up here, example 1. We have information related to 2 employees and the totals related to their gross pay, OASDI, HI, FIT, SIT, insurance, and their net pay. We're going to do the journal entry to record the wage expense of the employer and the liabilities for FICA taxes and federal income tax withheld, including the state income tax and insurance and everything, okay? So the way that this particular one would look is we would be debiting wages expense for the gross amount, $1,845. And then we're going to go across and we're going to credit our liabilities. So we'll start with our FICA OASDI. And that is $114.39. We also have the FICA HI. That's $26.75. We have employee federal income tax payable. That's $170. We have employee or just regular state income tax payable, which is $50. And then we have group insurance payments that are being withheld. So we could go with, I'm just going to put group insurance. $191. And then that net paid is going to be cash, which is $1,292.86. So the only debit is going for that wages expense, the gross amount. Everything else is being credited. That net paid is at the very bottom that we're paying out in cash. Down below this, we're going to include some of the information in example 1, which is all still example 1, but some of the information from that as the employer, because we match the FICA for OASCI and HI. So those are going to come into play when we get down at the bottom as well. But there are some additional numbers that we're going to see for our employer's payroll tax expense. Additional info that we have are FUTA wages, SUTA wages, and then we have the OASCI, but we have the total tax here and the total HI here. So we're going to put this in for the journal entry for our payroll tax expense. Scooting this. The debit is going to be payroll tax expense. We'll add these up and we will get that debit. Everything else is being credited. We'll start with FUTA. That amount is $369. Then we go to SUTA. That amount is $4606. Then we have the FICA OASCI. That's $114.39. And then we have the FICA HI. That's $26.75. All of these get added up. Our total payroll tax expense is a debit of $190.89. Additional info, additional things that would happen from that example. Later on, when we are depositing payroll taxes, we're going to start with the Form 941 taxes. This is going to include FICA and federal income tax. When we turn around and pay these, we're going to debit these payable accounts. So FICA, OASCI payable first. The total of those two was $228.78. That's because we withheld an amount for the employee and the employer side. We had both of those in the FICA payable account. And then we'll do the FICA for HI. Same with this one. It's doubled up because we had two different credits to that account. The total in that account is $53.50. And then we have the employee federal income tax payable. That one's $170. The credit to all of these will be cash, and that'll be $452.28. The next journal entry is where we're recording the deposit of payroll taxes for the state income tax. All we're going to do is we're going to debit state income tax payable, reducing that liability. It was $50, and we're going to credit cash $50. The next example is where we're recording the deposit of payroll taxes in terms of state unemployment. So we're going to debit SUTA payable. The balance is $4606, and we're going to credit cash $4606. Last one, where we're recording the deposit of payroll taxes is FUTA. Now, in general, FUTA deposits are only required when the amount is $500 or more at the end of the year. But for the sake of knowing what the journal entry looks like, we're going to go ahead and do it. We're going to be debiting FUTA payable. It's only $369. We wouldn't normally be depositing this amount. And we're going to credit cash $369. In my next example, we have an employer of a manufacturing company that's responsible for the following taxes. We're going to show the journal entry to record the payroll taxes and the employer's liability on those taxes. So this is just the employer side, the things that the employer is responsible for, which would be the FICAs, the FUTA, and the SUTA. Okay, so FICA tax OASCI on employers is 6.2%. HI on employers is 1.45%. The net FUTA tax is 0.6%. And the SUTA tax given to us in this scenario is 2.5%. The wage amount is $4,000. We're going to debit payroll taxes or payroll tax expense. I'll put payroll taxes expense. It is an expense regardless of whether you put expense at the end or not. We'll add those up. That'll be the debit amount. We'll move on. We'll credit FICA taxes payable for the OAI or OASCI. We'll be taking 4,000 times 6.2%. We'll get $248. That'll be a credit to that account. Then we'll do FICA for HI. We will take the 4,000 times 1.45%. We will get 58, and that'll be our credit for that one. Scooting up. Next up, we will do FUTA payable. We'll be taking that 4,000 times 0.6%. We'll get $24. $24 is our credit. And then we'll have SUTA payable. We'll take the 4,000 times 2.5%. We'll get 100, and that'll be 100. We'll debit the total payroll taxes expense at 430. And the credits all increase the liabilities for the others. One more part to look at, we do post these to the general ledger. When we do the journal entries, we do carry them over, put them in the general ledger. This is an example of FICA taxes payable for HI, its account. They had an October 9th payroll. Notice how there are two credits, one for the employee side, one for the employer side, and then the balance carries over here. A couple end of period adjustments I'd like you to be aware of. These typically have to do with scenarios where you have wages earned in one period or paid in another, or you might see it for vacation earned this year or in this period but taken in the future. So the first one I want to show you is an adjusting entry for wages earned in one period but paid in another. For example, employees earned $2,400 at the end of December, but they will be paid the following January. This would be a debit to wages expense of $2,400 and a credit to wages payable of $2,400. The second adjusting entry I'd like to show you is where vacation has been earned, but it will be taken in the future in another period. So an employee earned $1,000 in vacation pay, but it's going to be taken in a subsequent year. In this scenario, we're going to debit vacation benefits expense for $1,000, and we're going to credit vacation benefits payable.